On Tuesday, SpaceX told Wall Street it spent $18.4 billion of capital in a single quarter. 2 days later, SpaceX and Tesla confirmed where at least another $16.8 billion could go. Terafab, an advanced semiconductor complex in Texas. But there is a problem. SpaceX's own May filing described a $55 billion initial investment and $119 billion across later phases. So is this a disciplined first step or the beginning of a capital spending black hole? The confirmed plan is enormous. Terafab will sit in Grimes County, Texas, and cover more than 100 million square feet. It is designed to manufacture advanced logic and memory chips, then package and test them under one roof. The project is expected to employ at least 3,000 people from Grimes and Brazos counties. Texas is providing a $30 million enterprise fund grant, and the project also qualifies for a state property tax incentive program. This is not only a Tesla factory. SpaceX says Terafab will produce high-power chips for space-based data centers, while Tesla uses chips for Optimus robots and cybercabs. The companies claim their combined chip demand will exceed 1 terawatt of compute, significantly larger than current global supply. Whether that forecast proves accurate or not, management is telling investors that semiconductors are now a binding constraint on its biggest AI ambitions. The strategic logic follows the classic SpaceX playbook. When launch providers were too expensive, SpaceX built rockets. When satellite suppliers could not support Starlink scale, it built satellites. Now, instead of relying entirely on chip foundries, it wants manufacturing, packaging, memory, and logic capacity inside one integrated complex. Intel has said it will contribute, but its exact role remains undisclosed. That missing detail matters because chip factories require specialized process technology, not just money and concrete. Here is the investor problem. Thursday's announcement called $16.8 billion the initial investment. A SpaceX filing in May described a $55 billion initial investment, eventually rising to $119 billion across additional phases. A June county hearing notice used the same larger figures. The most charitable explanation is phasing. $16.8 billion is the first check, while $55 billion describes a broader first build-out. But SpaceX has not explained the bridge between those numbers. Investors still do not know how the $16.8 billion will be divided between Tesla and SpaceX. There is no confirmed groundbreaking date, mass production date, process node, or disclosed Tesla ownership stake. Intel has not quantified its contribution. Those are not small footnotes. They determine who funds the project, when the asset can generate output, and whether Terafab can compete with the established semiconductor manufacturing ecosystem.
Terafab lands immediately after SpaceX reported $18.37 billion of second quarter capital spending. $15.83 billion was attributed to artificial intelligence. That was far above the $13.22 billion Wall Street expected and more than 6 times the year-earlier level. SpaceX's chief financial officer said the next 2 quarters should look very similar. That means Terafab is not an isolated project. It joins an already historic spending cycle. The segment economics show where the money comes from. Connectivity, led by Starlink, produced $1.66 billion of operating income in the quarter. The space segment lost $542 million, while the AI segment lost $1.26 billion. In plain English, the satellite broadband engine is funding launch expansion and artificial intelligence. Terafab increases the pressure on Starlink to keep growing revenue and protecting margins. SpaceX is not entering this project empty-handed. It ended the quarter with $93.5 billion of cash and equivalents, alongside $36.8 billion of debt and finance leases. That provides real capacity to invest. But Morgan Stanley has forecasted that SpaceX may not generate positive free cash flow before 2035 and could require additional outside capital. The balance sheet can fund Terafab, but funding it without repeated dilution or debt is a different question. The bull case is that chips are the bottleneck for orbital data centers, advanced Starlink satellites, and the broader Musk technology stack. If outside supply cannot match 1 terawatt ambitions, owning fabrication capacity turns a strategic vulnerability into a durable asset. Management also claims AI compute deployments can pay back in less than 1 year. If those economics hold, Terafab could protect supply, lower long-run unit costs, and capture value that would otherwise go to external chip makers. The bear case is execution. Semiconductor fabs are among the most complex and unforgiving industrial projects on Earth. Terafab already has 2 conflicting cost frames, no disclosed funding split, no process node, and no production date. Hundreds of local residents have raised concerns about tax breaks and transparency. Meanwhile, the AI segment is losing money, and the free cash flow crossover may be years away. Big ambition does not protect shareholders from poor capital allocation. 4 disclosures will decide the thesis. First, an actual groundbreaking date. Second, the Tesla and SpaceX funding split. Third, Intel's specific contribution. Fourth, whether third-quarter capital spending remains near $18 billion. Until those answers arrive, treat $16.8 billion as the confirmed first commitment and $55 billion as the larger plan described in SpaceX's filing. Terafab could become the chip backbone of orbital AI, or the clearest warning that SpaceX is trying to build too much at once. Subscribe to SpaceXInvestor for the numbers behind the next update.